Hello, you're welcome back to this course, Forex Trading Made Easy. And today we're going to be talking about candlesticks. Candlesticks. So, a candlestick, like the name implies, is just a representation of the price that looks like candles. Okay, so there are three major ways prices are represented. The first one is the bar chart. The second one is the line chart, and the third one is the candlestick. So the candlestick is like a representation of price movement so that traders will understand what has happened in the past to be able to use it, especially for technical analysis, to ascertain what price will most likely do next. Now, remember what I mentioned earlier, that we will discuss how to make profits. We talked about pips, we talked about terminologies. So still going on under terminologies, candlesticks is one of them. Okay, some people attribute these candlesticks to a Japanese generation. Okay, whatever you attribute it to, candlesticks is a very powerful tool, as you will eventually find out, in determining where price is going next. So let's dig into it. Price, or every, you will see time frames. So when we talk about time frames, it represents different times on the market, and that also determines how the candlesticks form. And in a few minutes, you will understand exactly what I mean. You have the 1 minute time frame. Let's take a look at it. Now, the 1 minute time frame, the candlestick has a lifespan: open, high, low, close. So it opens at a price, makes a high within a given time frame, makes a low within the same time frame, and closes. And in this case, this is 1 minute, in other words, 60 seconds. So let's look at 60 seconds and see what happens after 60 seconds. Okay, so you will see price going up and down within 60 seconds. And for the 1 minute time frame, what it simply means is that it takes 60 seconds for each one of these candles to open and close. So let's take a closer look at it. As you can see, it's just a few more seconds. 3, 2, 1. Notice that a new candle will form. That's the open price. Now, while the candle is forming, if it is going up, you will see how it is forming. So it will go up within another 60 seconds. Now, you would notice that whenever price pulls back a little bit, you will see something that looks like a pin. That is called a shadow, or a pin, depending on how it is formed. Okay, so it is showing you where price, leaving footprints where price has been. So you can see price going up there, and what it simply means, for example, here, price opened here, went up here, came down to this point and closed here. So we have what we call bullish candles, and we have what we call bearish candles. We will still discuss bullish and bearish in a later course. But when we say bullish candle, it is upwards. So see, in 60 seconds, this candle has closed and it has formed what we call a bullish candle. So like I was saying, a bullish candle is a candle that opened lower and closed higher. Now, a bearish candle, as you can see, notice that when price was going up, this was unshaded. Now that it has opened and started going down, can you see that it is shaded? And all of these happens within the 1 minute time frame, which means 60 seconds. Remember, 60 seconds make 1 minute. So in the next few seconds, you realize that this candle will close and another one will open. So now you know how these candles are formed based on price, exchange rate fluctuations, and At the end of the day, you will have, okay, this is about to close, another one opened. Okay, now for the 5 minutes time frame, what it simply means is that it takes 5 minutes for this candle to complete, and for 15 minutes it takes 15 minutes for each candle to complete. In that order, 1 hour, it takes 1 hour for each candle to complete, which means 4 hours. The H4 takes 4 hours for each candle to complete. Daily time frame, one candle takes one whole day to complete. Weekly time frame, you guessed right, one whole week to complete. And the monthly time frame, it takes 1 month for this candle to be completed. Now, a lot of people love to play around with different platforms, different time frames. We will teach you how to choose your trading strategy, and there is a system they call top down analysis. They want to see the trend on the higher time frame and pick their trades on the lower time frame. That is entirely up to you how you choose to trade. But the information I'm passing today is the candlesticks. And now there are certain shapes and there are certain patterns that a candlestick usually has. And every time you see those shapes, you are almost certain that certain market movements are going to happen. So in the next course, we are going to talk about the types of candlesticks. Thank you for sticking around. Check the description of this video. There is a link to join our Telegram community to get more information on trading matters, signals, and a lot of other fun stuff. See you in the next course. Bye for now.